The government shutdown continues. I'm going to take us through the Affordable Care Act, Obamacare, ACA, whatever you want to call it. We're able to shop plans now. The enrollment period begins on November 1st. It runs all the way through January 15th. Today's not financial advice, never financial advice on a publicly available YouTube platform. Depending on your state, you may have a slightly different enrollment window. It's very important to know what the rules are in your state. Insurance is managed at the state level. My name's Jae Oh. Welcome to Jay's Corner. I'm the author of Maximize Your Medicare. I'm an education fellow at the Alliance for Lifetime Income. You can find my quotes pretty much everywhere on healthcare cost planning topics. I'm going to try to show you the platform that I use that you can use to connect to me to get our free guidance when it comes to the Affordable Care Act. Can I be compensated? The answer might be yes. Not always. I don't write the rules here. The reality is since I don't control the rules, I'll still fulfill our fiduciary responsibility. If you want to get the most, if you want to be the most aggressive to get the best combination, you have a special situation, you have financial planning reasons to drive down your net premium. It can be because you are trying to compare COBRA to the ACA. It can be because you are waiting to turn 65 and become Medicare eligible. It doesn't really matter. There are lots of special situations. Reach out to me. I'll be able to discuss whether or not you qualify for a one-time fee service. I'm not saying that is going to always be the case. Someone you know doesn't understand what they're going to be doing and doesn't understand the huge impact that the higher premiums, which aren't in the news now, will have on everyday American lives. Be sure to like and subscribe so they can discover this video as well as the rest of the videos on Jay's Corner. So what you see on your screen is my individual link, right? This is Health Sherpa. It is the very widely accepted kind of technology platform. Okay, so if you come here to my link, I will see what you've entered. And from there, I can help guide. This is your starting point, and I just want to show people kind of how to use the tool as well as some of the stunning results. So very simple here. We'll just use a very simple case and just go to Chicago. And I happen to know it because there's a place where I'm in a graduate school. One person, 35-year-old male. So the important thing here is household income. Right, this is modified adjusted gross income star. Again, remember that star, what I mean by star is that this is not precisely your income because there can be different additions. For example, if you're 63 and you're receiving Social Security, you're going to have to add the entirety in here. But let's just back to this 35-year-old male. And let's just call it $35,000. So you can see here what ends up happening is automatically this $301 is basically your advanced premium tax credit. What happens then is all of the plans that are available. Note that if you are in a state where you have your own separate portal, Georgia, New York, New Jersey, you've got your own separate portal, you ultimately have to execute there. I can guide you there. You're going to be part of the emails, but that's part of what people need to know. $35,000 yields 301. So you can see as you scroll down here, the crossed out number here is the sticker price, retail price, MSRP, however you want to understand it. From there, you are given this 301 as a tax credit on a running basis. So instead of 356, you get 356 minus 301 down to 55.74. Very importantly over here, what I think is very good about this, which does need to be double checked, is you can add your doctors and hospitals here. So for example, if we try to put in here and just try to put in Northwestern University. And now you'll see certain locations that are, and let's just call it the, general hospital. And if we add, so what'll happen is you can see that it does this particular plan. This is nothing against Oscar. I represent Oscar in different locations. Doesn't take this plan. This is the key. The last thing I want for our clients to have is for you to show up and for them to not take your insurance. That does us no good. But you can see here that it can be difficult. And this is the bugaboo here. This is the challenge of the Affordable Care Act, right? Which is this is not Medicare, where original Medicare takes pretty much every healthcare provider. But you have to fit your combination of doctors, hospitals into the plan. And so what ends up happening here is you can see that you can click, and now only the now you can get to the plans. It filters for you and says, okay, takes this plan, dependent on address. So we need to be careful. You can see it here. This one is covered. And so now you can see the very complicated matter here is that the data here is imperfect. The data you get out here is imperfect. It's a very good starting point for the filtering. It's still imperfect. So now you can see what has happened, that originally you had 1, 2, 3, 4, 5 carriers. But instead, when you then filter down by the hospital, it has filtered them down to 1. Nevertheless, you can see the fact that this is notably lower than the $392.80, which was the original premium price. Okay? This is the way to go about it. Now you can see, for example, I'm going to show you some other examples. And let's just use this county here, 30301. And now you can see here, you move to a different zip code, a couple of things. Number one is your premiums savings are higher here. Okay, so it's higher. This is Atlanta. This is Atlanta. We're going to remove this here from providers. Right. And let's just use Emory. So there it is. And we'll just use an internal medicine foundation. No, just use the hospital. And now you'll have a different set. And again, you'll see doesn't take this plan. So Georgia, they actually have their own specific portal. Nevertheless, this is still a very good way to start the filtering process. You can see here what I've done. And now if I click here, we don't have this number of plans, but we have a fewer number of plans. So you can see 27 plans. Whereas if we don't have a filtering system for this person in Georgia, you have 123 plans. It goes and makes my point, which is I don't think that it's a good idea for individuals to do this alone. You can see that even a single click here changes your menu a lot. We've got a lot of details to work out in order to make sure that this is right, that you understand what we are going to be claiming. Remember here, when you are making this statement, you are making a statement to the IRS, which is subjecting you to audit for accuracy. And one of the changes that has occurred at the CMS, which I do agree with, is the fact that the verification of this income has become more strict. You don't get to just enter some phantom number in here in order to get the higher APTC. You don't get to do that. This is the very first time that I'm actually even seeing this. I'm just picking out zip codes that I know off the top of my head. I'm going to continue to do that. Now it seems that only this carrier is taking this plan, of which there are 27. And on will come this list, and depending on your combination of deductible and out-of-pocket maximum. Now, I'm going to swerve for a few moments here for clipping purposes. It's very important for people to understand what deductible actually means. Deductible in everyday language means you're first up to the cash register until you meet that number. What I do like about this plan, this specific plan, now that I'm seeing it, it's literally the first time that I'm seeing this for 2026, is the fact that the deductible is combining health and prescriptions. It's a nuance, meaning that in most plans, the deductible has the two separate, and in fact that the prescription, that the amount that you pay for prescriptions don't get included into the calculation of this 5800. In general, that is actually the case. This is actually an exception. Once you've met 5800, the second big number here is this 5800. So out of pocket maximum, once you've met it, then the carriers are going to accept all the extra charges from that point. More nuances. You can understand that the following. Let's just say, for example, that you're Mr. Sick-a-Lot. You have news from your urologist telling you that you need to go for radiation therapy. The reality is you're going to hit the out-of-pocket maximum. The monetary exercise, the financial exercise, is way different than the exercise by your twin brother who has a clean bill of health. This is so vital because what I see is our people make errors. And these errors, as you can see, at $400 a month, you can make a multi-$1,000 mistake. Because, for example, let's just say, for example, that you were for sure going to hit an out-of-pocket maximum, that you had $50,000 of medical services that you would require. Well, then the way to filter is 12 times the premium which you must pay, and then add the out-of-pocket maximum, and the one with the lowest total is the one that results in lowest overall cost. So this is why that always the cheapest premium is fine. I can understand that. It also may be incomplete. You're going to have to now start squinting pretty hard. This is $12 more a month, and the out-of-pocket maximum is higher. So if you know for sure that you're hitting the out-of-pocket maximum, you don't end up choosing this plan, even though it may look like the deductible is lower. So you can see, quite subtle. And I chose a very subtle difference here. What I'm going to do now is I'm going to add a spouse, and you're going to see other examples. So now we have a 60-year-old spouse. And now we've got a person waiting for Medicare at 63. Let's just take Tampa, Florida. Even if you have $60,000 of household income, the amount of advanced premium tax credit that you're eligible for, $23.89. It is entirely possible to have health insurance at zero. That still is the case. So this was a great relief to me. Like I said, not working with the script today. You're seeing it as I'm seeing it. Let's just take, for example, that your doctor or hospital only takes Florida Blue. You can filter out here. You can still find a plan at zero, but you can see that it is notably weaker. For example, you've got the deductible is higher. The out-of-pocket maximum is the same number. This is pure disaster insurance. That said, the reason I don't agree with a lot of the crosstalk, a lot of the noise and crossfire about, because we're not going to be able to resolve complicated matters underneath the hood. We are simply not. As a consumer, as an everyday person, of which I am a consumer here, I'm not going to be able to call my congressman and say, fix this, and so that I can get, very robust insurance where the deductible's, $3,000 and out-of-pocket maximum is $3,500. That is not going to happen. Here, you can see that, of course, it's Emory, so I'm not even going to change this for now, but my highlights here are two. Number one, it's still possible. Even at $60,000, right? This person isn't rich in the Tampa area by any means. You can use $60,000, certainly. That said, you can also see that depending on your age, that this married couple is 60 and 63, you still get this amount. What ends up happening is if you're at 260, however, probably no savings. And you can see how big a difference it is. For example, at $60,000, if you look at this, this is 2,400. If you multiply it by 12, you are talking about a $30,000 a year difference. $30,000 a year difference in lower health insurance premiums. It is worth the exercise. Earlier in this video, I was implying some complicated exercises, the work that we do over here. And what we are doing is making sure that this number, household income, is accurate and planned for. Because you can see that if you gloss over this number and if you don't take care of it, and not only this year, but each year, this person is 63. This male needs to wait to 65. We want to have the maximum savings during the years that he's 63 and 64 years old and the months prior to turning Medicare eligible. Now let's just take someone in the middle, 160. The difference as a result of the reduction in enhanced APTC. In 2025, you could get savings, and in 2026, this will disappear. This is the key difference. This is your key takeaway. This is the topic of many videos here on Jay's Corner. Be sure to like and subscribe. I'm terrible self-promoter, terrible. My point is that this is the difference, how enormous it is. That when you gloss over, when you don't understand the topic, when you don't take care of the topic, what you are costing yourself is $2,400 times 12, $30,000 a year. So now you've decided to retire early. Now your company has decided that your layer of middle management is no longer necessary. For the people who have planned carefully, for people who work with us, our greatest success stories here are clear. We've paved the way to access these lower premiums. For those who don't, they go to Acme Wealth Asset Management, who's not aware of this interaction, and now you have it here. The same plan is 22 times 12 more expensive in 2026. And this is for the person who makes $160,000. So he makes $100,000 more just to give back, straight back, almost $30,000 in higher health insurance premium with the same identical plan. We could keep going on and on and on. Literally, that is the case. Be sure to click the link. It gets you started so that you can do the window shopping. Again, it's still my idea that doing it yourself is a very expensive and possibly very costly thing for you to do. There is no obligation here. I'll make this last point, which is I've received some emails to say, I don't trust Health Sherpa. That is not the way that I would look at this platform. The way I'd look at this platform, and you can see my logo up here in the corner, meaning that all of us are signing up to use the platform. It is sitting at the desk of GH2 Benefits, a company that I own and operate. Be sure to like and subscribe to this channel. Also, press links. There's a free and paid newsletter for extra insights. Please understand that there's so much noise here. I think it's safe to say that our society is pretty toxic, which is that I'm trying to provide you information that doesn't exist. I'm also trying to make sure that you understand that I'm the highly regulated. So I'm being very careful with what I am saying and what I am not saying, meaning that today's not financial advice, never financial advice on a publicly available YouTube platform.